Yeah, so, we always take a weight of the evidence approach more than just looking at any given level, but there are two levels that I think are worth highlighting we've been discussing with clients. The first you mentioned, 41.77. That's important because that was the June high, and what we know is that July was actually an inside month, which is fairly unusual, but all it means is the entirety of July's trading range was inside the high and the low of June's. And so if we were to take out and especially close above June's high of 41.77, that would be an indication that, potentially that medium and long-term trend is shifting more in favor of the bulls. But again, we need to see a close above that. But then more importantly for us, and this is the one we've been talking about above that, is 42.31, and that's because that's the 50% retracement of the entire decline on a closing basis from, the January high to the June low. And that's important because we went back and looked, and since 1950, we've never seen a market that has gone down 20% or more on a closing basis, reclaim 50% of that decline, and then go on to make new cycle lows. So a close above 42.31, historically speaking, would be pretty significant.
Yeah, we have a lot of bearish sentiment here on the investment committee today. So in your mind, what you're seeing on the charts right now, what are the chances that we get to that 42.31? Do you have a time frame of when, if it crosses that resistance level, we'll see an uptrend for the rest of the year?
Yeah, look, we're still a bit cautious here, again, because it's a weight of the evidence approach. So when we look at, cross assets and credit spreads and a lot of different things, we're still a bit skeptical. But I think if you were to get that close above 42.31, it doesn't mean you just flip the switch and go all in on the long side. I think it just gives you a frame of reference to suggest, okay, maybe the June lows were the cycle lows, and you want to get more constructive on pullbacks. But again, I think some of the action we're seeing today is a little bit frothy. We're seeing, the most shorted names are up 18% over the last 5 days, just some very extreme moves. So I think in the short term, things are a bit frothy. If we were to get a close above 42.31, you could probably say that, over the next 3 to 6 weeks, you probably could be more constructive on dips, but we're not quite there yet.